Welcome, everyone, to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. Sunday, just about 5 p.m. Eastern, March the 11th, 2012. No major news over the weekend, except HBO's Game Change. Wow. Sarah Palin. I didn't vote either. I couldn't vote for her. Could never have her be president. Boy. Just amazing, though. How these idiots only vetted her for 5 days. Other good big news over the weekend, obviously, is you look at the S&P 500 weekly charts. Remember, on Sundays, we do the weekly. Try and get a longer-term perspective. And we see here the hanging man. Could have been a nice outside candle if they closed it over 1380, but still. If we could take out, 1375, that'd be bullish. I don't think so, though. I do think that the situation in Israel is getting worse. 37 missiles, the Iron Dome, Israel's missile defense system, destroyed. 37 missiles. They were able to take them out in the air. Let's just hope Obama doesn't say, see, we can knock them down. So we can let Iran have a nuclear weapon. Doesn't stop the suitcase, does it? 37. And I think the situation in Afghanistan is going to explode. I think that when you look at the killing, an American soldier killing 16 Afghans, 9 children. That's horrible. There will be retribution. There will be attacks on Americans, and it could get ugly. This could be the start of the end. Maybe not an easy pullout like Iraq. So, a lot of news headlines coming from that in the next 24 hours, I would imagine. And, of course, Syria always has the potential to blow up at any moment. Other than that, we do have some nice big economic data coming out this week, more particularly FOMC rate decision. Bernanke, maybe he's going to take back 2014. Maybe he's going to indicate a willingness to take back 3 months in a row. If you're a listener of my show and you know, that's always been my premise for a change in trend. Has it been 3 months? You get data 3 months in a row, and that's a good thing for a change. And, the U.S. jobs number, we did have a turn. We've been steadily over 200,000 now for 3 months in a row. Certainly not changing the landscape, certainly not changing things, but certainly a positive indicator. Still, with an unemployment rate well over, 8.3%, underemployed, not looking for jobs or collecting unemployment anymore. The rate's like 16. Forgetting about the youth, 18 to 25 in the United States. Greece, unemployment, 1 out of 2 in youths. It's just horrible. Elections are going to be important, but we're talking about the end of April, mid-May. And another good story out of the New York Times I highly recommend. Believe it or not, me recommending the New York Times. That's a joke. But the New York Times story about U.S. counties in dire straits. Pensions. 10 years ago, I believe it was Suffolk County, Long Island, New York. 3% 10 years ago of revenues went to pensions. Now it's up to 35%. You know what's going to happen? They're going to be forced to do a Greek haircut, municipalities in the United States, or go bankrupt. Can you imagine a 70% haircut on municipal bonds? What that would do? The outrage in the United States? It's coming. It's just a matter of when. But again, looking at the S&Ps, we have no real news tonight. Japan has some numbers. We do have a Japanese rate decision. We know they rated QE3, QE10, Japan. This dollar yen continues to act awesome. We look at this dollar yen, it's going to 85. 85. It's a story of ever. Meredith Whitney, of course she's going to be right. Just a matter of timing is everything. 84.50. And, this dollar yen could be a Tuesday sell in the news. Bernanke delivers, gets up to 84.50, another 200 pips, and sell. So certainly should be. But again, you look at this weekly chart, this is 10 years, and we're due for a monster rally in dollar yen, and we're getting it. Obviously, we're already up 700 pips from the lows. Look at your Fibonacci retracement. That's 95 from the, 2008 high, 124. So, long way to go, people. That's a lot of pips. Looking at the dollar index, obviously Friday was certainly a lot of people scratching their heads. Sorry, that's the S&P again. Again, the S&P, should we go near 1380? You can't really see it that well on the weekly, but this is a little bit of propeller pattern. You got your little shooting star maybe here. You got your hammer. Almost touched the 10 exponential. Maybe you get some good news. Bernanke indicates things aren't as great as everyone thinks, and bond yields go back down. We'll see. But a top is definitely coming. You look at this chart, we are way overbought. You do a comparison. Australian dollar. In my opinion, the Australian economy is falling off a cliff. We've had a trifecta of bad news. Even exports out of China are slowing. Trade balance number Friday was disgusting. Horrible out of Australia. Rolling over, even the 10 exponential arcing, that's not a good sign. But I think in order for you to get a little momentum to the downside from here, we need the S&Ps to come in. Very important. But you look at the correlation between the S&P and the Australian dollar, we're diverging a little bit. Right? The S&Ps have continued to grind higher. Well, this Australia now is down here. Something's got to give, baby. But again, the dollar rallying on strong U.S. fundamentals. We've now seen this a couple of times on non-farm payroll, where the S&P hangs in there, up a little bit. Really, we went sideways. And the dollar rallies. But we see here dollar index in a nice uptrend. I still wanted that 77 level. If you've been watching my week aheads or dailies, we've been talking about this 77 spot, 77.50 now. And we're catching up. So the more we hang out and build over here, now it becomes 78, that channeling. That's in a couple of weeks. But it does look like this dollar index now could start to make more of a move upward. Nice uptrend channel. We could start making a move towards 82. But again, I find it hard to imagine that we're going to continue to push that much higher in the dollar index without having an S&P come in. And you got a number of factors. Again, consumer confidence might be waning in the U.S. And it's a lagging in consumer confidence with oil being this high. Job prospects, yes, getting a little better, but a lot of people still out of work, underemployed. You look at this nice hammer in gold. Certainly looks like we want to make another run, maybe up to 1775. I think Bernanke again is going to be the key. That's on Tuesday. We got CPI data coming out. We got a rate decision out of the SNB. Their statement should be interesting to see what happens with Euro Swiss. Rate decision out of Japan, but again, that we know about. Oh, come on. Freezing up on me? Lovely. But when we start to take a look at some of these weekly charts, looks to me like things could get a little on the ugly side. We're getting close. Come on. Can't make this stuff up. Let's see. Everything's freezing up. Just great. Let's see, what other charts do I have? Well, I could show you dollar Canada. Let's take a look at dollar Canada. Let me see here. Nice little bottom. Euro Canada collapsing on Friday. Dollar Canada really going nowhere. Jobs number out of Canada was decent. But still. Certainly a nice little daily chart hammer. I think dollar Canada pushes back higher. I think it plays a little catch up. But again, the most important thing tonight are the S&Ps. And again, 37 missiles Israel intercepted. 37? That's going to hit the wires, I think, get more attention, in addition to the American-Afghan situation, which was not good. Let's see. Well, so much for Euro-Swiss. Again, we look at the daily chart. Nowhere. So again, the SNB obviously should be interesting to see, but it's holding. It's going to take an event. And I think the elections in Greece are going to be important. If there's something that could throw a chink in this whole scenario, it's going to be the elections in Greece. Let me take a look at this euro-dollar chart. Daily chart does not look very good. Looks like we're definitely going to head towards 130. Nice downtrend channel holding this whole levels. Yes, we didn't get to 136. Yes, that would have been nice. But sometimes you don't always get there, people. Rolling over. There's a weekly chart on the euro dollar. And once again, to me, we need more of a catalyst to get down here, but it certainly looks like this 115 level. And if you measure the move from the bounce, 126 and change up to 135 almost, you swing it down, we're almost at 115. But again, I think it takes more of a credit event, more of a stock market sell-off. We need some sort of a catalyst to make that happen. They've got some wage prices. We got German zoo coming out this week. That could be an interesting number, but it's supposed to increase to 11.2 from 5.4 on the German zoo. We got Ecofin on Tuesday, maybe. But do you really believe anything they say anyway? To me, the FOMC definitely is the event of the week. Bernanke speaking on Tuesday as well. And big Thursday out of the U.S. Unemployment claims. We'll see if those can actually tick lower. But we take a look at this euro. Euro sterling trying to pop a little bit on the weekly. I think we get up maybe here to 84 and change, and it looks like more of a sell. I still think euro sterling is going to come in. And again, the Australian dollar, I love as a short. I think this Australian dollar is a short across the board. Remember my pound Aussie call for 2012? I still stand by it. This baby's ready to fly. Look at that chart. You get a little risk off, just a little. This thing goes to 160. Easy. I think we get to 170, even 180 at some point this year. But obviously, if we break through 147, 146.50, it's all over. That would probably coincide with an S&P 500 exploding. But, the Aussie dollar, Aussie Kiwi in particular, I think this baby's rolling over. Looks very head and shoulder-ish. Not perfect, obviously. We'd love to see more of a neckline. But we didn't get it, but certainly a nice little shoulder area, left, right. Love to see us come down, build a neckline, but this thing looks terrible. And again, GDP, terrible. Employment number, terrible. And now trade balance, terrible. The trifecta, baby. So Aussie dollar. You look at this Aussie Canada. Look at the nice reversal in Aussie Canada. This looks like a gorgeous short. Dollar Canada, very resistant. So, hey, it's a nice little hedge. Be short Aussie Canada, long dollar Canada. But I think this baby really cracked. We had a nice continuation. I think we could easily see 103, another 150 pips. That should be easy. And then we could talk about some sort of long-term fib retracement, but a little head and shoulder building here in this thing. Sterling, we do have employment data coming out of London this week. That should be interesting again. Euro sterling is going to be a key, but cable looks terrible. We break through 156.50. Look at this. Monster spot. Momo. And you do your Fibonacci. Talking 155.50. Easy, that low here on the weekly. Big spot. But obviously this 56.50-ish level, say bye-bye. But should be very interesting to see. Again, London numbers, employment, yes. We have DCLG house price index also coming out. Really, all the beginning of the week, we've got no numbers in London for Thursday and Friday. Rick's house price balance coming out. That's about it. But again, the employment number should be interesting on cable, on the pound. And again, the yens continue to act awesome. Sterling yen, nice hanging man. We take out 130. We're gone. To the moon. Alice. Look at the double comeback. Very bullish. Maybe we come back all the way down to 127 again, but it's a buy on pullback. This dollar yen, like I said, looks like 84.50 easy. And it's probably going to be this week. You know, Aussie yen, though, I'm bearish on. I am short. I think Aussie yen, unless it gets to 88, I think it'll get pulled down by an Aussie dollar sell-off, even though dollar yen might go up 200 pips. Aussie might come in 200. This thing will go nowhere. I don't think 88 is going to get knocked out on the upside. But I do like other Aussie shorts, obviously Aussie dollar, Aussie Kiwi, even Aussie Swiss. Aussie, Aussie, Aussie. This thing looks like it wants to roll over. Aussie Swiss. Can't break through. Certainly pull back down to 95. Kiwi. If I'm right about Aussie, Kiwi, New Zealand should hold up. Kiwi held up nicely on Friday into the close, but gapping down nicely, New Zealand. As Aussie, Kiwi gaps up a little bit. But certainly New Zealand dollar on a weekly 1-2, getting a little overbought. We're going to take out 81. I think we do a Fibonacci retracement. I think we could head down to 79, 78-ish. Certainly we take out 81. We should have some momentum. Momo. Remember, under 81 would be below the 10, 20, 30 exponential moving average. That would be very bearish. Very. Dollar Swiss. Looks like it wants to pop. Getting caught up with the dollar. I like other trades better. But certainly dollar Swiss does look like it wants to get pulled up. If the dollar continues to rally, we should see dollar Swiss move higher. Maybe make a run towards 95. Again, weekly dollar Canada. A little inside candle. Holding up well. I think you put a nice tight stop. We take out 98 previous week low. 98.60, 98.70. Certainly get the hell out. But I think we can make a run back up to par. And probably have another inside candle, barring any big volatility in the markets. Again, you had gold come back. You had oil come back. Commodities came back. So that is generally bullish for Canada. And that's it. Let's take a look at oil, actually. I feel like I forgot something. Oil made a nice little comeback. Looks like it wants to push higher. And again, things in Afghanistan, things in Israel are not very good. Syria, not very good. Take a look at this Euro Canada falling off a cliff. Look at that, baby. Big sell-off on Friday. Big. Close terrible. This thing looks like it's toast. Toast. See a little 125. And again, that Euro sterling, I think, comes in. I think the Euro, again, comes in more. And I guess that's it. All right, everyone. Listen, look for my twits. Remember, I'm on Twitter. Voice of Forex. Follow my twits. By the way, this Euro Yen is gonna be a tremendous trade to the downside when it starts, when dollar yen stalls. Now we might grind up, we might pop up even more. Nice comeback, nice hammer on euro yen. Certainly you get risk on trade, and you get a Bernanke that's hawkish, taking away 2014 back to 2013. You could get an explosion. Certainly above 110, certainly around 115, but you know what? You never know. I think this channel line is more important here. And that would be around the 113, 112 zone. And I think then we start to roll over. But the fact is, this baby still looks good. We're turning to the upside. You need a big spike up and reversal. And I think, hey, maybe it's going to be this week. You never know. And remember, I do have a premium junior. Premium junior. $50 a month. That gets you my daily trade recommendations, emailed around 5 o'clock p.m. Eastern. That gets you access to my premium tweets that I only send to my premium members. The only difference is you don't get access to my chat room. And then, of course, I have a winter special for premium regular. That's at 3 months for $400 US. Email me, info@globalfxllc.com. I think tonight we get sort of a lackluster open. I think if you could sell some strength, sell the dollar and buy the dollar into weakness, sell the euro into strength. I think it'll be a good trade. I think the euro does crack through 131. I'll give you a little euro dollar hourly chart. I think we break through that 131 level and we roll over. Say goodnight. Oh, yeah. Certainly down to 130. And if you measure this move, it's about 200 pips. That gets us down to 129. And we should probably easily get down to this low here. That's 129.75. Todd Gordon, that's your spot. All right, everyone. Feel free to email me again, info@globalfxllc.com. Things could change in New York minute. News comes out, that'll change my bias. But based upon these weeklies, I still think dollar index higher. S&P doesn't take out 1380. And we have a nice little pullback this week. Andrew Spanton, Global Markets Radio, the only voice you'll ever need who truly loves to make you money. Have a good week. Check my daily recaps. Like my video. Bye-bye.